My friends, what is going on? Welcome back to the channel. First and foremost, thank you to everybody who liked the tweet that I said needed 1,000 likes for a weekly Outlook video. I'm always humble and grateful anytime you guys show your appreciation, and this is my way to give back. We're going to spend the next however long it takes, 30 to 45 minutes, to go through a whole bunch of charts, look at some setups that I think are good. And yeah, you guys know the deal. Nothing is financial advice. I just want you to make awesome decisions for yourself, your family, and your portfolio. We will cover a chart. We'll cover the indexes, cover some charts that I think are good setups and ones that I promised I would talk about on Twitter. Then we also had some fan requests, if you will. We'll look at those, and then we'll call it a day. Remember, market is closed tomorrow, Monday, for President's Day. So we are looking at a short week. And the reality is the market has been very choppy overall from like an index standpoint. My chart that's up right now, this is going to be SPY. And you can see just the choppiness that's gone on through the last 3 weeks. I just don't think there's too much of a reason overall to be super bearish or honestly super bullish right here from an index point. The reality is all we've shown so far is that we have been super choppy. And I think that super choppy is something that's very reasonable to continue, especially right now when Trump is, well, we're going to tariff this or tariff that. Oh, we made a deal. There's been a lot of volatility. And for me, I love volatility. So more volatility, the better, as far as I'm concerned with my particular trading style. So I'm going to continue to treat everything one day at a time, just like I always have. And I'll take it one day, one level at a time. Never going to be, incredibly bullish or incredibly bearish. Just you got to trade what the chart is telling you. And that is my personal opinion. That's the way I'm looking at it. So as of right now, we are pretty much up here at all-time highs. I really think so long as we stay above 600 on SPY, the inevitable path is going to be to continue upwards. If we start losing a bunch of key levels, then we'll cross that bridge when we get there. But as of right now, like for instance, SPY on Friday, just insanely choppy, insanely low volume, and who cares, right? Like there's lots of great setups. So even if we got a pullback, all the way down to maybe low 600s, or even as long as you keep basing these previous tops over here around like 608, 607, I think overall it looks fine. QQQ looks a whole lot better. I mean, you have a clear breakaway gap from its previous all-time highs with continuation on Friday. So even if we catch a move on Q that comes back, retests this around 530 and then continues up, I think anything above 530 QQQ looks really good as well. IWM by far and away has been the weakest index. Continually on my screen here, that blue line is the 50-day simple moving average. You can see it is just fighting that over and over and over again. Every time it comes up, it rejects. You are overall making a series of higher lows. So once again, I'm not really paying attention to this. Even if you come back here and double tap 218 on IWM, or once you start getting above about 233, then I think it looks strong. But until then, it's completely range bound. So index wise, I really don't have too much of a feeling on. It's been choppy. I think it continues to be choppy. There's lots of individual stocks with great setups that have been fantastic, and that's what I'm going to continue to focus on. For anybody who doesn't know, Tesla is my number one holding, and it's my number one stock that I trade on a regular basis. So overall, the things that concern me on Tesla right now is it is forming a little bit of kind of a bear flag / rising wedge down here. You can also argue that up here to about 360, that we're kind of forming a little head and shoulder. So price comes up here, get your neckline right here, could be working on something like this. Overall, right now, I still think the move on Tesla more likely is topside than downside. I put out a video, I want to say it was either going into Thursday or Friday last week, where I really kind of explained. I think Tesla's coming back up here to a minimum of right around that somewhere between 370 to 383 before a potential rejection and then more downside. If we back out to Tesla on a weekly basis, you can see why, so these 3 weeks right here, why this 360 to 363 level is so very important to get through. If it gets through that, then I don't think there's any question it's pushing up here towards somewhere between that 370, 385. Like I said in that video, I won't be feeling really good about Tesla overall until we start getting back above that 414.50. That's the end game. I think the most likely thing, once again, is a continued push up here. I think we're in a bit of a bull trap phase right now. But that doesn't mean you can't play topside, even if your overall feeling is you still think it is a bull trap. So on this hourly look right here, we could expect a move that continues to curl back up towards that 367 to 370 level. And a lot of times what you'll see on these type of rising wedges or even falling wedges is you'll see a little bit of an overthrow, kind of an up thrust move up here before then you actually catch that move that then rolls over. Another thing I'm going to be watching for on Tesla is going to be some different bullish RSI, MACD divergences that are going to be going on. And simply what that means is, let me just pull it up here. So this is always what you want to be looking for when you think an actual major bottom might be coming in. So as of right now, Tesla got down here to right at oversold territory 30 on the RSI. So even if we do roll over and make a new low or like feel like that 320 gap area, I really think about as low as we come would be somewhere around that low 300 area before we start to curl. What we would want to see on the RSI is we would want to see some type of higher low get formed, even though price makes a lower low. That will make me feel very good. Back in the summer of 2023 on Tesla, let me just get over here. Yeah, this one. This was, let me go down here on the hourly basis. Sorry, guys. Is this, nope. Yeah, this one right here. So you can see right here, even though price rolled over and made new lows, this was this inverse head and shoulder. This was right before the squeeze started to kick off. Then it came back, retested that, and then we were gone. But the entire time, the RSI was making higher lows while price was making lower lows. So that's what I'm going to be looking for overall on Tesla, even if we do roll over. So if we roll over, it's not a big deal. We just want to see some of these higher lows start to come in. So let's get back over here to where we were. Right there. So even if price shoots up, we get to that 370, we catch a rejection, we come back down here, test like the 320s, maybe even the low 300s. We just want to see something like this overall. And that'll make me feel really good about a bottom being put in on Tesla. Now, from a bullish perspective, I still think, like I said, that is the most likely thing, is that we are in a bit of a bull trap right here. If we do blast through and can continue right on up, and you blast through the 414.50, then you come back and you retest it again, then that's overall. I still think this is a very corrective move. I called out the seller's climax right here, that this was the perfect spot to play Tesla, this super high volume day. That shows you basically everybody's getting shaken out at that point in time. And this was the spot to play Tesla on a bounce. So really, this previous high right here, these dead cat bounces a lot of times can come all the way up. And look where that 618 is. Sorry, I know that. Let me zoom in. Let me try to clean this up just a little bit here for you guys. But this 618 right here at 380 to 385, I think that is the most probable landing spot. We can kind of come up in here, and then somewhere in here, that's when we could catch the rejection and then roll over. Maybe we make a double bottom with the bullish RSI divergence, or maybe we make a new low. Either way, I don't really care. I'm looking for a short-term bull trap that then leads to the bear trap afterwards once it rolls over. That's overall what I'm going to be looking for. All right, spent way too much time on Tesla. Nvidia, guys, here's another perfect example of it. So while Nvidia pushed up and rolled over and made a new low on price, that RSI made a higher low, and from there, now you're seeing that big push on Nvidia. So something very similar on Tesla would be exactly what I would be looking for. As far as Nvidia goes, I think anything over 130, you have to be bullish on. From a weekly perspective, it put in a bullish engulfing weekly candle, then put in a continuation candle. So I really think unless something crazy happens, plus you got Trump saying, China stole our chip business or whatever, we want to take it back. All the big boys reiterated their CapEx spending. So only if you start seeing that CapEx spending really start to come down, but they all said we're spending the same in CapEx and we're spending more. This was a pretty clear shakeout with the whole DeepSeek stuff. I think Nvidia is going to move on to all-time highs, and Nvidia has a history of doing these kind of moves. Back over here, where you had the big head and shoulders that everybody was talking about, and it swept out the lows, then it swept out the highs, consolidated before making its move. So I wouldn't be surprised at all if Nvidia comes up here, does something where you take out the previous highs, then you'll get a pullback to like 140 range, and you might consolidate there and then rip out. And they obviously still have earnings coming up, so that's still going to be a major catalyst, but I don't envision anything but things doing well here for Nvidia. So I do like it to continue to push up. Once, it starts getting over 140, it's going to start putting a lot of pressure on. I do think Nvidia is going to do well this year. All right, let's talk about Palantir, the one that everybody was like, some people just got their panties in a wad about me saying that, hey, this thing's starting to look a little bit weak. I think Palantir, just like Tesla's had a 30% pullback this year, just like Nvidia's had a 30% pullback this year, I do think Palantir is getting close to a period where it's going to need a pullback. Like I said, guys, I do not trade off the RSI. I don't think that's the way to trade personally. What I love about the RSI is it helps you with like entries, it helps you with potential exits, but I really like it for those divergences on price. So what I'm going to be looking for on Palantir is just a pullback probably towards the $80 range. So this last move right here, I think it could come back to anywhere between that like $90 to $80 range. And like I said, it's not the end of the world. Like, I'm not saying that it is, right? I would expect with the earnings that they had, I would expect this gap to get protected. But typically what you'll see is you'll see a move into the gap like this. That makes a lot of sense right here around 90. So you'll have a lot of buying pressure at 100 just because that's a key psychological. And then you'll also, once you start to break 100, you'll typically see the selling pick up a little bit. And then everybody will start going, oh, there's nothing but air down here. Palantir's coming all the way down. And it'll come where in here in the gap to like the 618. And then you'll get some type of bounce. And then you would watch for some type of double top. Or just like I said on Tesla, if you break through and come back and retest and that shows as support, you'll continue pushing upwards. So like, just don't be part of a cult that is a stocks only go up or anything like that. Like, the amount of people who were freaking out about it just shows that it's about to catch a shakeout. Overall though, Palantir I think looks very good structurally overall, like on a weekly basis. The reality is you traded sideways up here basically all of December and January heading into earnings, then you broke out. If you were looking at this chart, like any other chart, any other 15-minute chart, if this chart rolled over, came back and retested these previous highs around like 70 and then continued upward, would you be super bearish on it or anything like that? No. And what type of pullback would that be? That would be a 35% pullback. So I think a 20 to 30% pullback in Palantir is a very reasonable pullback to get the energy to then push up. Just look at the chart, people. Pullbacks happen even in an overall uptrend. Quit getting your panties in a wad. All I care about is making money and getting a return on my investment. That's all anybody should care about in the stock market, not being a cheerleader for a stock. That is retarded. Speaking of GameStop, let's talk about the meme stocks. So GameStop came right up here. This is the line that I had drawn out. I said I think we'll probably catch a rejection up here around that $30 level. Pretty much opened up, sold off all day. The most bullish thing that GME could do down here is to fill out some type of inverse head and shoulder. And I'll talk about both these with AMC and GME. I talked about this where this was the carry trade area back over here. So this candle back here to me is kind of an outlier candle. The reality is GME made a very nice kind of inverse head and shoulder look. And the most bullish type of inverse shoulders that happen, guys, are the ones that sweep everybody out. And I'm going to draw it out for you, but I'll do it on AMC's chart. So what I would like to see from GME here is to still, this next week, defend this gap up right here. I don't necessarily want this gap to completely close. What I want before that gap closes is I want it to reverse. And I want it to make its way back up here towards that 28 to 29 to 30 level. Maybe even you get something that shoots up here and you actually regain 30. Regaining 30, I personally think would be a bull trap in this scenario. Then I think you would catch the rollover move that then fills this gap, sweeps all these people out from back over here. Then you get the reversal happens that actually pushes up and out. Then you roll over, retest, and then you start to move. I always tell my traders in my Discord that you always have to think about the market's only job is finding liquidity. And you should always approach every single trade with what screws over the most people. So what screws over the most people in these situations, what gathers up the most liquidity is the bull trap, followed by the bear trap, followed by the actual move. That is what is always going to take the most people out and get people the most frustrated. We've never been so back. We've never been so screwed. Wait, what happened? And they're gone. That's how the market works, kids. The sooner you come to grips with it and quit crying about manipulation and it's not fair, and you just actually understand how the market works and how it garners liquidity, you'll be better off for it. So that's my recommendation. Also, that is how you can see here, that's how the 200-day will kind of be drifting through this move. So go into 30, come back, maybe touch the 200-day one more time. The most diabolical thing will get like a daily close below, just like what Unity just did. I'll show you that here in just a second. And then you start to get the actual move. So just stay on your toes, don't over leverage, and don't cry. AMC. This is exactly what I'm talking about. So right here, you kind of have this inverse head and shoulder look. You have the move that shot through all the way through 10, right? Then you came back here, you took out these previous lows, but before it actually made anybody going, well, I'll just wait for the double bottom now. Before it actually made that, now you're starting to catch the reversal. On a weekly basis, which is what I posted on Twitter last night, I actually don't hate the weekly look. You are rejecting right off the weekly 9, but this is overall kind of a morning star pattern. A morning star pattern is where you have candle, lower spread, low volume candle, followed by a gap up candle with increased volume. And that's what you have on the weekly. On the daily, what I like about it is you also have some nice bullish divergence going on. Once again, this is what I like about the RSI. So even right here, from a daily perspective, even though your price, so you had your seller's climax right here, then price rolled over, you made a new low, but your RSI was making higher lows the entire time. Now you're starting to curl back up. I still think overall, it's not in super bullish territory. Well, it's not in super bullish territory until you get over 10. But you definitely need to recover like the 50-day and really the 200. This is what you were starting to get back over here before Captain Dilution showed up and just smacked this move all the way right back down. So that is overall what I'm going to be looking for. I think AMC can easily make a run back up towards that 450 around there come earnings time. Earnings, I mean, obviously there's not much to talk about it. It's all going to be about how does that forward guidance look. And once again, at the end of the day, like I said, I don't care about where your position is or what it's at. I don't care about none of that. I care about technicals on a chart. That's what I'm looking at here. And the technicals look good for a potential bottom coming in. All right, moving on. Meta is one that has just been a runaway freight train. However, on Friday, remember, even though the overall indexes and everything like that was all very low volume, you started to get a little volume spike up here. I'm starting to look at Meta as a potential buyer exhaustion that then is going to roll over for a retest. So if the market is really weak, I think Meta is one that might get hit with a little bit of a exaggerated move. Even if that's just coming back, like I said, that 618 at 640 would be just rolling over to retest the outbreak, or the breakout, and then can potentially continue to push on up. So if the market is weak, Meta is one that I am going to be targeting for a potential put trade. Anytime you have this volume coming in after a sustained uptrend, that is signals of a buyer's climax. Once again, going back over here to Tesla, if and I showed the Discord the tweet, but this daily candle right here, that the volume was super high, like higher than anything else in this overall trend, and that spread was super low. I said that we are showing signs of buyer exhaustion up here. Then the very next day, you tried to push higher, shoved back down. Tesla's never seen a new high since then. So what I am looking for overall in Meta is if I continue to see weak candles with volume increasing, I think it's going to be time for a Meta pullback. So it'll be on my watch for downside. And that's what you have to do, guys. You have to have trades every single week that are like, if the market is weak, here's what I'm going to target. If the market is strong, here's what I'm going to target. I don't give two shits what the market does. Like, that's completely out of my control. What I do care about is identifying trades and setups where I go, okay, if things are weak, here's where I'm going. If things are strong, here's where I'm going. If things are kind of sideways and choppy, I'm going to sit on my hands the entire time. Know when to do nothing, too. MicroStrategy. This was one I really like in here. After this strong push right here that was back on Monday, February the 3rd, and you've just basically been printing inside bars, you still don't have an inside bar close, but if we go down here on the hourly, certainly have a clear breakout of the downtrend. Had kind of a nice little pennant going on here. This is a clear impulsive move followed up by consolidation, in my opinion. Now, the next big thing is if Bitcoin can show any type of strength whatsoever, is actually going to be breaking out of the downtrend. Now, overall, this is a descending triangle look, right? And typically these type of moves, the bearish side would be a breakdown, a retest of this area around 300, and then followed by further downside. That just happened on SoundHound. Let me just jump over to that chart. So this is one I actually liked right here, right? Very similar setup, applying pressure, volume ticking up, applying pressure right here. And then what happens? Nvidia comes out the very next day, market open, and Nvidia's like, yeah, we kicked them to the curb. We sold our position in that. You have a massive gap down and breakdown. So I think SoundHound probably can come back, will probably make its way back up towards 13, and then it could potentially roll over for the overall breakout of this move right here before potentially coming back up topside. So I've got no position in it right now, but those are the things that you want to look for. Trying to be just as clear as I can here. Any type of pattern, falling wedge, rising wedge, like doesn't, All that kind of stuff is, guys, is it's purely how the stock is consolidating. That's it. How a stock consolidates can allow you to lean more bullish or bearish, but the only thing that matters at the end of the day is what actually happens. Like, what is the actual move? If every single bull flag that ever gets formed turned out to be a massive breakout to the upside, everybody would be rich. If every descending triangle that ever formed in its entire life broke out to the downside, everybody would be rich. A very easy example of one that didn't was Roblox. Here was Roblox forming a descending triangle right here. And what did it do? It broke out and it kept running. And then I just showed you on SoundHound. Here's a descending triangle that broke down. Both are descending triangles. One turned out to be a bullish result. One turned out to be a bearish result. So consolidation is just that. It's just consolidation. What matters is the actual move that comes out to it. Yes, consolidation, like a bull flag or like a rising wedge / bear flag that Tesla's in right now, that allows you to go, I think overall this move is probably a bear trap. But I could be wrong, and I'm not going to allow my bias to make trades for me. If Tesla just starts gapping up and ripping up to here, then okay, that's what happens. If Tesla's real weak and keeps crawling up here, I'll probably be getting real bearish by the time most people are getting real bullish, and it's going to do one of those. So consolidation is just consolidation. All right. Lightbridge. So this is one that I've been in shares since 9. Definitely not my favorite looking daily candle. Once again, because this is showing signs of buyer exhaustion. I mean, this is, sorry, I know I keep going back to Tesla, but it's very similar, right? You have a big, strong push, followed by a hanging man, followed by a bearish engulfing candle. Sorry, that's on the hourly. Right here, big, strong push, followed by a hanging man, followed by essentially a gap down. This is kind of like an evening star pattern right over here. So Lightbridge does have me concerned, just that it needs to come back. I mean, really, if it holds 1250, I think it's fine, which is going to be kind of right in here, these previous tops. That would be a very normal pullback. It's okay to have a very normal pullback in an overall uptrend, just like Palantir. Calm down, soy boys. I think even if Lightbridge came all the way back to like 1127 and then continued to build out, very similar to what Olo did over here. Olo, very nice push. Nice pullback in an overall uptrend, followed by more uptrend. People are just hilarious. The internet's just hilarious. Whoops. So that's kind of what I'd be looking for on Lightbridge overall. I mean, the reality is unless it starts breaking 10, like I already took some profit. I sold 100 of my shares at 14. I still hold 200 shares in this, like I said, with a cost basis of 9. Even if it came all the way back over here towards 10 to test, I think it would still look very good overall. This is one that I kind of plan on hanging on to a little bit because just the breakouts look great on it. Olo, I've heard people say both. I don't really care. I like Olo better, so we're going to roll with that now, which probably means it's the wrong one. I think it could come back to about 45. But overall, this volume down here, like it's just very much consolidating, in my opinion. I don't hate it in any way, shape, or form. Look at the... Yeah, so I mean, this weekly candle just kind of looks like pause in the overall trend, right? And it could build out very similar to over here. Right? Just let it consolidate as these EMAs catch up, and then you get the next push out. They will have earnings that are coming up. I believe they said in March, but nobody really knows for sure right now. But this overall has been a very strong stock. I think it's chilling. If you do start to catch a pullback for any reason, yeah, around that 38 to 40 is going to be a great spot. Anything above 30, I think could be good. I mean, even if it pulled, once again, even if it pulled back to 30, right? In the big scheme of things, if this chart kind of did one of these, whoops, and a year from now, it basically scoops and makes a gigantic J hook up and out of here, just like it did here, and a long-term consolidation and pullback. Let's see what these pullbacks were from its high to its lows. 40%, 38.5% to be exact. But people want to freak out on pullbacks. It's hilarious. Don't insult my stock. It only goes up. All right, Unity. This is the one that I was talking about, very similar to GME. Like if you catch that type of V-shaped recovery, like this is a shakeout here. It rejected the 200 and it's selling off. Oh no, the volume is creeping in. And then the very next day, like I said, kind of put in that same, like I was talking about on AMC, that kind of morning star look. And now it's completely recovered. They do have earnings that are going to be coming up. So back over here on GME, even if you then push back up towards 30 and then it comes back down, and let's say it like gets below the 200 and you have a really ugly day and everybody's freaking out, and then it just kind of makes one of those V-shaped recoveries. Never underestimate the cruelty in the games that market makers will play. I guarantee there were a lot of people shaken out of Unity when it rejected off the 200, because I mean you can see it in the volume. People got shaken out of this thing. The volume picked up, and then the very next day, no follow through, and then now it's V-shaped recovery. All these people down here are going, oh, freaking A, why did I sell? Very similar to this right here. Broke below the retest of the inverse head and shoulder that was down here. High volume sell-off day, closing at the low, seller's climax, and then bloop, V-shaped recovery, and gone. Never seen a new low since. Now, who knows? You might after earnings. We'll wait and see. But I like the way this thing is moving back into it. I've been in shares pretty much right around my cost basis. I bought right around 20 to 21. But I still like the looks of this setup. I still think it's going to be a winner long term. I really do. I don't think 60 this year is out of the question in any way, shape, or form. Speaking of another one that's kind of bull flagging back to support is going to be Visco, Victoria's Secret. So had this nice high push. I talked a lot about it in the 27, ran all the way to 48. Now it's kind of flagging back in, low volume, back towards the 200 day. I like the looks of this setup. They do have earnings coming up. But just like I showed you with Oklo, come down here, build out a base, and then you get the next leg and move upwards. I think it's a fantastic setup. That's all I care about. This pullback, 35% pullback. But if you bought down in here, like right around the 200 day, who cares? It's good for stocks to have pullbacks in their overall uptrends. Nothing goes straight down, nothing goes straight up. All right, let's jump into the ones that you guys asked me about. A lot of people asked me about HIMS. This one is a concerning look to me. You're catching these high volume blasts up here. This is very upthrust in my opinion. And then on Friday, you got a shooting star look with a ton of volume behind it. I wouldn't be concerned about this look if you had something like this, where overall it was relatively low volume. You're starting to get a high volume. So I think even if it's momentarily just a pullback, something that comes back towards, I think probably around that 45 range, this move here, right? This basically, practically parabolic move. Even if you come back here, work your way down towards about 45, maybe build out something that looks like a bull flag before you start curling up. I think that makes a lot of sense. The 618 is right here at 35. So once again, when in doubt, zoom out. If you've got a great average on this, congratulations. But if this thing does, and they do have earnings coming up, but if this thing came back, retested these previous highs, then kind of built a base and started doing that, it's not the end of the world. It's a good thing. You don't want parabolic moves straight up because then the crash is even harder. This is the overall. And look, this is what it's done, guys. Like, this is what it's done right here. This type of move right here. You had a 50% pullback before continued upside. So it's okay for your holy grail to have a pullback. I promise. I've ridden a 30% pullback on Tesla this year alone so far. I think 3 to 5 years from now is going to be a whole lot higher than it is right now. So I don't really care. Here's how you know if you're in a good position or not. Or you're in a good stock that you actually want to own. If you freak out when a stock pulls back, there's a good chance you're either over leveraged or it's not something that you really want to own anyway. If you're in a stock and it catches a 30, 40, 50% pullback and you are genuinely excited about the opportunity to own more of it, then that's how you know you're in a stock that you actually care about. It doesn't mean it's going to go back up from there, but it actually means you're in a stock that you think is going to be a lot higher than where it is right now. I personally would never hold shares in a company that I don't think is going to, at a minimum, have an opportunity to 2 to 3x from where my cost basis is, if not more than that. So for the most part, when I post chart setups and everything like that, like I'm a trader, okay? I trade different stocks. For instance, like what I'm in Lightbridge right now, it's a trade for me. It's not like, oh, Lightbridge is going to change the future. I am so excited about this. It's just a trade for me. I don't care. I'm just looking for a return on my investment. That's it. I have no emotional attachments to the company. If I think it looks bad, I will sell it tomorrow and not think twice about it. At any point in time, I own thousands and thousands of shares of Tesla. At any point in time, if I lost faith in the company, the leadership, or where it was going, I would sell it without thinking twice about it. Do not become emotionally attached to a company. That company does not care about you. Do not become emotionally attached to a company. Do you think that company goes, well, we're thinking about doing a dilution, but you know what? Billy on Twitter said he was going to sell his stake in the company if we did another round of dilution. So let's not do that because Billy is a valued investor to this company. Like, get over yourself. They don't care. They're going to do what they think is best for the company. So you just have to decide if you want to go along for that ride. HIMS, I don't like the volume. This is giving me very much upthrust vibes. I would love for a pullback post earnings somewhere around in there. The reality is I think so long as it stays over 25, it's still going to be looking great for the long term. These previous all-time highs, this is exactly what I was talking about, right? Like it pushed up through those previous all-time highs, came back, flagged, retested, and then you got a strong push up after that. So that's the move that you really want to track, even if it came back to 35 or even 30. I still think that is going to be a great place to potentially add if you believe in it long term. But it's a great looking chart. Yeah, and honestly, even the weekly still looks really good. So the daily looks a little shaky, but that weekly, it could just build out some bars here to consolidate, letting everything cool off, catch up, consolidate up here, and then you catch the next move out. But that move could come back to 40, 45, even 30s, and I still think it looks great. Sofi. This one is one that I really like. Clear downtrend. Same thing. Like from here to here. It's a 22% pullback. But don't freak out. Like, it's crazy to me. Sorry. You recovered your 50-day moving average, your 921, your 5 SMAs. Everything's curling up underneath it. I really like this look. You got a nice volume breakout. This thing starts getting over 17. What it reminds me of Hood very much. It reminds me of this consolidation right here on Hood that just kind of felt like it lasted for forever. And then finally you got the breakout move and continued moving. So That kind of 13 to 17 is SoFi. And SoFi likes to trade sideways, right? Anybody who remembers this right here knows that the reality is like $10 to $6. It just ping-ponged in that. Good Lord, how long was that? Like a year and a half. Ping-ponged around in there before breaking out. I think anywhere between 13 to 17 is going to be a great time to add SoFi. Also very similar on Palantir. Was this back here? So this is kind of where I think SoFi. So you had that original breakout move and then just ping pong from 19 to 12 over and over and over again until the 200-day caught up. Then you moved up and then just overall moved up, even though there were pullbacks. 30% pullback. 30% pullback. 30% pullback. So, yeah. Whoa. Not sure what just happened right there. The Apple's chart doesn't look bad at all. Not weekly. As long as you can stay above, you got to stay above that 237. But this thing, the big concern about Apple has been the China demand, and that's subsiding because they're getting in bed with China. So I think Apple potentially could take off. All right. But like I said, SoFi, this is, like I said, this is the, what was I talking about on Palantir? Yeah, this range, that kind of 12 to 20 range where it just bounced around. Then once you got your breakout, you're kind of off to the races overall. I still own shares in SoFi. I bought right around 13. I still think this looks great. Yeah, I mean, I think it'll build out. The one thing you would want to watch for is a potential, overall kind of head and shoulders look. I don't think that's the most likely thing. I really don't. That would just be something as long as SoFi continues to base above these lows that were over here from 2021, I think SoFi's in great shape. Only if it starts to lose like 13, 14. And you can see what happened back over here. Like every time it dipped down into that territory, immediately bought up. Dipped down into that territory, immediately bought up. So I'm chilling on SoFi. I think it's a winner this year, especially over the next 1 to 2 years. Grab. This is one that a bunch of people have been messaging me about. They have earnings coming up, so be very cautious of that. But I do overall like this move. So you had the failed breakout right here, and same thing. Like it tried to break out, super high volume blast, and then you had to eat the pullback before then working its way back up. But I overall like the bull flag. When you back out on a weekly basis, I mean, you have a clear and obvious breakout of where it was from that $4 level. And the reality is even if it came back, like at this move, fails here, and then it comes back and gets into this $4 territory, and the overall move just kind of becomes a little bit larger bull flag that pre-tested literally years of previous tops, and then it starts to move, I think that's okay. I have zero position in it, plan on having zero position in it, but it was a highly requested. And yeah, I do think that, you have a nice volume push, you have a very low volume consolidation, and you're starting to build out. So I wouldn't be surprised at all if it rockets after earnings. But I just think there's too many good setups out there to really gamble with earnings. But potentially like anywhere between an $8 to $12 move is absolutely on the table with this thing. Yeah, 10's going to be big because that was your big level of support kind of post IPO. So I would be shocked if it didn't come up there and meet some resistance. But I think this is overall a very good accumulative look that's making its way up here into this is certainly a sign of strength up in here, but that can play out for a little bit before it starts to get the move up. So it's a good setup. The safest way to play these type of moves is with shares. It always has been. It always will be. Trying to time exactly when a massive move might happen with options is going to be a little bit tougher. That's why with options, I mainly play. Well, if I'm trading with size in any way, shape, or form, like in the hundreds of thousands of dollar range, it's always going to be on the big boys with tons of liquidity like a Tesla. But I like it. Yeah, it looks good. Anything as of right now, anything back towards 450 is a great opportunity to buy a dip. BBAI, this one I do have a position in. Kind of very similar to what we were just talking about with that grab look, right? Like coming over here, formed a nice pennant. You have a nice breakout. You pretty much get nice days, followed up by consolidation days, followed up by overall larger moves. I am in some May calls on this one right now. This is a clear, breakout of this long-term consolidation. Essentially a big O, right? Came down here and made a massive double bottom. So yeah, I'm still looking for more top side on this one. I think 16. I think it's probably going to test previous all-time highs of 16 sooner rather than later. So that's what I would be looking for on that one. And then so long as it holds any type of pullbacks towards 750, I think it looks good overall. The structure is still certainly intact. Let's see here. Gorilla Tech. So I started my position around like 26, and then when it dropped down here towards like 25.50, towards 20 upper 24s, I added more shares. As you can see, pretty much just coming back, retesting the previous highs. I like the consolidation look right here. Bounced right off the daily 5 SMA. So yeah, I think this is a good one too. I'm only in shares in it as well. Even if it kind of comes up here, even if it forms like a cup and handle look, coming back down here towards 17 and overall curling. The overall move here is still very much a breakout. Very similar to Visco right here. So this is kind of where I think Gorilla Tech is. It was like a Visco was down here in that 24, 25 range. This breakout on Gorilla, oh, there it is. So just using fib extensions, which is how I like to trade. And I love the sustained volume in here. Go back and watch the video that I made on it a few days ago if you really want a longer look at this one. But the one extension of this move right here is very much in reach, which is 74. I think at a minimum it's going to like 35 to 50. 1.618 is 243. I don't know that I'm ready to call for that type of move, but this is certainly a move that you could expect overall continuation. That 75, there's a lot of rejection points up in here from that. So I think that's a very reasonable price target. This is something I'm only in shares in. I'm basing it off of a daily chart. When I'm in shares, I'm not even going to consider making a cut on a move unless I start getting looks on a weekly basis that I don't like. Otherwise, I'm just going to ride it out. Just like on Palantir, I bought a bunch in that kind of 12 to 20 ballpark area and then just let it ride. I did sell at 100. I posted that on Twitter that I just put a stop in at 100 and it sold. Am I upset that now it's up here at 119? No, I don't care. I made a great return on my investment. Moving on to the next. That's how the market works. What's hot today may not be hot tomorrow. So you just got to find these type of great setups. Anytime I get high volume pushes followed by low volume consolidations followed by a return to volume starting to curl this thing in, that's where I feel like I have winners. I love it when we've got things like major SMAs that are obviously going to continue curling this way. Is this one flattening out? So those SMAs are going to continue widening. Now, you just got to be willing to be susceptible to things like news, like on SoundHound, which is why you just have to be sized responsibly. No one play is the end all to be all. You got to have bad trades at times. It's just part of it. It's part of it. And you just got to take it on the chin when that happens and go, oh, well, moving on to the next. Just like when you win, you go, oh, that's nice. All right, moving on to the next. Keep your emotions where they belong. One setup that I do still really like on the daily is ASTS. This one, stop me if you've seen this look before, right? Just like on Gorilla, you have this super, super, super long downtrend. Then you get your breakout. Now you have sustained volume coming in. super, super, super long downtrend. You actually get your breakout. You get your sustained volume coming in. If this was a 15-minute chart here on ASTS, you'd be licking your chops. But this is a daily chart, and I'm still licking my chops. This one, I don't have shares in. I am in calls in this one. But that bounce right here off the 200-day, followed by a nice volume push. I mean, this one, man. I mean, I'd be shocked. This year could be a really good year for ASTS. Trump has been vocal about, space, and we need to get people to Mars and everything along that lines. It's just a hot sector right now. There's lots of names that are hot in this sector. I think ASTS has a beautiful setup after this bounce here. I am in calls on it as of right now. But even if we go back here to this weekly look, like super nice consolidation. Look how that volume drops off. Gets to its lowest volume before then the move starts to happen. So if you're in shares here, congratulations. I still think it's a good opportunity to buy shares. And yeah, I mean, these moves are pretty crazy looking of what potentially could happen. But man, it's a great look. It's probably my favorite macro look that's out there right now, of anything that would be even remotely speculative. I mean, I think conservative numbers on this. Here's his last real big breakout to here. Yeah, I mean, 40 I think is doable very soon. And then I wouldn't be surprised at 50. Let's just even see before we even start to get super overbought or anything. Yeah, so I mean, it's not even overbought yet. This thing's got a lot of room to run. That's probably my favorite setup. So that's how we're going to end the video. This is probably my favorite setup right now on some more speculative names. It looks good. It can run and it can run hot. I mean, don't be surprised at all if it puts in a 20 to 30% day this next week. Yeah, and that would take it to 40, basically. So yeah, I think 40 is a very doable price target in a very short amount of time. All right, I hope this video was helpful to you. Much love. Make a plan. Be ready to rock and roll. Like, subscribe, all that good stuff. And don't be a cheerleader to a stock. Put your emotions out of the stock market and come in with a focused, unemotional plan of how you can make more money. That is the only goal. Have a good one, my friends.